Stocks in the mix, the Dow lower, but the NASDAQ pushes higher and the S&P follows with a close above 4,200, holding on to some important levels. Caroline Woods and Kevin Green are with me, our senior markets correspondents, to take a look at some of the stories from today that maybe deserve a second look. I think probably Meta's 1% climb is the most meaningful 1% move I've seen in a long time in a stock, able to make a fresh high on the year, Caroline, despite a $1 billion fine from the EU stemming from Ireland.
Yeah, a $1.3 billion fine over the transfer of EU data to the U.S. We kicked off the morning on MTL talking about how Meta seemed to be just kind of shaking it off, and it held on to those gains. So investors apparently unfazed by this huge fine. Regulators found Meta illegally stored data about European users on its servers in the U.S. So in addition to that fine, they also ordered it to stop sending information about European Facebook users to the U.S. and delete data already sent. So this is tied back to a case where it argued the framework for transferring EU citizens' data to America didn't protect Europeans from U.S. surveillance. The chair of the board of EU privacy regulators said the unprecedented fine is a strong signal to organizations that serious infringements have far-reaching consequences. Meta, as we talked about this morning, said it's appealing these decisions, including what it calls the unjustified and unnecessary fine. It will immediately seek a stay with the courts. In a statement, Meta said, the decision is flawed, unjustified, and sets a dangerous precedent for the countless other companies transferring data between the EU and U.S. Meta said there's no immediate disruption to its European operations, but as I said, in addition to the fine, Meta needs to stop sending information from the EU to the U.S. and delete all of the data it already has over the next 6 months. So Meta says that it could avoid that order if Washington basically completes a new agreement with the EU to allow data transfers before that 6 months. So this will likely put pressure on the U.S. to come up with a deal, but as we said, Meta shares up about 1% today, up about 3.3% this month, and more than 100% so far in 2023.
Yeah, wow. A huge rally already behind us. I mean, I guess some of this maybe is just momentum. Kevin, going to take more than a $1.3 billion fine? Or is it the notion that they can push back on this? I mean, with Alphabet and courts in Luxembourg pushing back on their own massive, almost $1 billion fine a couple of years ago. I guess the market just has time to figure this out.
Well, the shareholders from Meta were well aware. I mean, I think they actually did bring this up in their last conference call. So I don't think it's that surprising.
Okay.
Obviously, also that the appeals process, too, gives them a little bit more time. I would be surprised if they did not win at least a stay on that for now. So I think that's also what's being priced into this move to the upside here. But I do believe that they actually did acknowledge this issue in their last earnings announcement. So I don't think this caught a lot of people by surprise as far as the situation in itself. I think the fine is potentially a little excessive, but once again, I think once they go through the appeals process, they might be able to work that fine down or try to find some common ground with the EU and Ireland.
Okay. All right. Nice rally today, got to say. Impressive stuff. And we also had the whole sector higher with it, so just carried everything. And the comms group, Alphabet, another big day, up 2% there. So a lot of strength, shrugging off potentially negative news. Let's talk about a stock that really hasn't been able to shrug off much over the past year. Zoom Video down 20% in the last 52 weeks. A little bit of a bounce last couple weeks coming into this earnings, and it might continue. The move here in the aftermarket is higher, with the tick as high as like $78. So it dropped down, but we're still trading up from the close pretty substantially, around $73.50. Earnings beat estimates, $1.16 adjusted on the bottom line. 99 cents was what the street was looking for. It's a pretty healthy beat there. Sales edge out the expectations as well, with the $1.11 billion revenue figure above the 1.08. You impressed, Caroline?
Well, I was talking about this on the panel for the watch list because the expectation for revenue was 1.08 billion, which would have only represented about a little bit more than 1% upside from the 1.07 billion in the previous period. And so this obviously 1.11 coming in better than estimates, but still single-digit revenue growth. So I think the question was, will that be enough to impress investors who really haven't been all that impressed with Zoom, as you said, over the past, it was down about 5% in 2023, but up about 3% heading into this report. So there was definitely some optimism heading into the report. And as you said, based on the initial move that we're seeing, it seems like that could continue. So the beat on the top line and, of course, the bottom line likely is what's giving it a boost. I'm also taking a look at the outlook here. It sees Q2 adjusted EPS of $1.04 to $1.06 on revenue of 1.11 to 1.12 billion dollars. So could see a little bit of sequential growth. In terms of full year, they're expecting 4.47 billion to 4.49 billion. In terms of the expectations, want to see what they have to say about large enterprise clients, because there's definitely been a shifting focus towards those clients. I know in the same period last year, revenue there grew 31%. So waiting to see that breakdown. And of course, churn, because of just obviously macro conditions. It's not a great time for a company like Zoom, which has really been putting pressure on the shares. I was chatting with the analysts over from CFRA and Runnymede Investments, and they said that management tone is what's really going to be key on the earnings call and really discussing what's next for the company.
Right.
So will it be a bigger top line grower? What are the plans? Are there going to be M&A plans? We talked about AI. They said it won't be a 1 month fix. It could be 2 to 3 years out in terms of some of the investments that they've been making. But really just what's next for Zoom.
Yeah, I caught that part of the panel from the watch list about AI possibly being in their future, but being a couple of years out. I'm not sure if the market's got patience for that. We want those two letters now. What do you think, Kevin? This morning, I described your outlook and your analysis of the company as sort of positive and maybe more prepared for a surprise to the upside than downside. It looks like you might have hit the nail there.
I don't know about that, but yes, this report actually looks really good. And actually, Caroline, the enterprise customers are at 215,900. That would be an increase of 9% year over year. And then the monthly churn was at 3.1%. That's down about 50 basis points year over year. They're also looking at the number of customers contributing more than 100,000, up about 23% year over year. The full year guidance is better than expected. The next quarter guidance is better than expected. They are raising their forecast as well. I mean, overall, it does seem like they are providing some growth, a growth story here. Maybe they have seen a little bit of a bottom in their cycle, and we are starting to see the stock move up to the upside. There was a significant implied volatility type of move in this announcement here. The market was looking at about 11%. Let's see if that actually comes to fruition after we get off of the call. I was on the call the last quarter, and they did talk about AI very significantly. That's when we started hearing this ramp up. Let's see if they go back to that trend, or if they're looking at other areas of the marketplace to be able to grow their business. And I think if the company focuses on the enterprise side of this business and really tries to hone in on that, I think that's going to be the bread and butter for them moving forward. But overall, this is actually a pretty good report when you're looking at pretty much all of the metrics here. I think the operating margin from a GAAP standpoint, it was at 0.9%. You would like to see a little bit better than that. The non-GAAP operating margin at 38.2%, that's actually fairly decent. But once again, you kind of want to focus on that GAAP number, even though it is a technology company. You want to be able to see what the adjustments are post, tax consequences, things of that nature, for it to be solidly in the positive. But I think it's a good report.
Okay. All right. Nice little change of pace here for Zoom with an upside surprise, and shares are up right now. We're trading at $75, so pretty nice little bounce. Saw almost 5% in the aftermarket. Thanks for the help, team. Caroline Woods, Kevin Green.